everyone. Welcome back to another episode of Web3 Deep Dive Podcast. I'm your host, Rachel Wolfson. Today, I'll be speaking with Kevin O'Leary. He is a famous investor. He's very well known for being Mr. Wonderful on Shark Tank. So I'm going to be discussing everything about Bitcoin, Web3, regulations, TikTok, and much more in this interview with Kevin. Before getting started with today's episode, I'd also like you guys to take the time to like and subscribe to the channel, especially if you enjoy the content that you're seeing today. Your support means everything. I also want to take the time to thank the sponsors behind Web3 Deep Dive Podcast. Thank you to VeChain and VBetterDAO, which is a sustainability-driven dApp ecosystem built on top of the VeChain Thor blockchain, aiming to promote Web3 adoption and incentivize actions that contribute to meeting the UN's 17 global sustainability goals within Web3. I also want to thank XYO Network. XYO revolutionizes data sovereignty in the decentralized era, ensuring trust and precision through its innovative blockchain-based protocol and network. Finally, thank you to Freedom GPT. Freedom GPT is the app store for artificial intelligence that allows anyone to access any AI model. Okay, without further ado, let's get started with today's episode. Hi, Kevin. How are you?
Very good. Thank you very much.
Yeah, well, Kevin, first of all, it's a real honor and pleasure to have you on Web3 Deep Dive Podcast. So thank you for joining me. I'm just so excited to be speaking with you today.
Thank you.
Yeah, so Kevin, you don't need an introduction. I'm sure everybody knows who you are, but for the listeners who may not be as familiar with you as I am, if you could just give a brief introduction and talk a little bit about your background and all of that good stuff.
Well, I'm an investor. Basically, and I invest across all 11 sectors of the economy. I'm very focused on disruptive technologies. I have a very large portfolio of companies, over 50 of them, in pretty well almost every state now and overseas as well. A very big advocate for digital payment systems and cryptocurrencies. And so I engage in a lot of different activities. I look forward to working with entrepreneurs. That's what I do. And I obviously use my social media platform and television and radio and everything else to promote their products and services. I'm an advocate for small business in America.
Great, right. And recently I was watching Shark Tank a few weeks ago when I was in LA in my hotel room. I was kind of binge watching Shark Tank for the first time. And so, you know, you're a host on Shark Tank. You're Mr. Wonderful. And I just want to let everybody know that if they don't already know.
Oh, thank you. I enjoy that. It's going into its 16th year. We're very proud of it. That's extraordinarily long for a television show, but we have become a global platform and we support American entrepreneurship.
Right. Yeah, it's a great show. So thanks for that entertainment. So Kevin, let's talk a little bit about Web3. How did you get involved in the Web3 and cryptocurrency space?
You know, when you start to look at the potential of financial services and the digital aspect of it, it becomes obvious that although these have been very controversial and volatile, and we had the first period of what I call the period of the crypto cowboys, the FTXs and the Binances and all that, they're all gone now. And that's good because integrating the new advancements, these new technologies, Web3, and all of this into the existing financial services infrastructure is going to provide a tremendous amount of productivity enhancements and cost reductions and enhanced speed and pretty well everything. And so it's really about how do you do this successfully? Where do you invest? Do you invest in the picks and shovels? Do you invest in Bitcoin or other tokens, et cetera? Or do you do it all? And I've chosen to do it all. I've taken my bets out pretty well everywhere. I own a lot of exchanges around the world, up in Canada, WonderFi, in the Middle East, M2, in Abu Dhabi, very important exchange now that, M2 is basically picked up where Binance left off. And so they're getting all the new accounts because they're compliant and they work with the ADGM and they work with the other regulators around the world, the group of so-called 7. And we're in a new age now. We're in a new positive growth age for Web3. And it's going to affect all kinds of things. Gaming is huge. Collectibles are huge. Financial services are huge. Transfer payments are huge. All of it.
Right. It's interesting that you say that we're in a new growth phase of Web3. Can you elaborate on that just a little bit? Like
Well,
what's different now between versus 2017?
Well, I'll tell you what's different. You finally have institutional capital interested. 97% of invested wealth, as much as that, depending on what country you're in, comes from the institutions in it, whether it be sovereign wealth funds, pension plans, hedge funds, endowments. They didn't play in Web3 and they didn't play in crypto because it wasn't compliant. And they couldn't integrate it with their compliance reporting. I mean, when you're obviously working within the confines of the SEC and the regulated stock exchanges and bond markets and currency markets, you can't be a rogue, you can't be a crypto cowboy, and they just watched it come and go. Now, recently, obviously, the big watershed event was the allowing of an ETF, spot price ETF on Bitcoin, and you saw what happened to the price of Bitcoin. It's been one of the best performing assets this year. So if you bought it at 17 or 20,000 just a couple of years ago, here you are at 72,000, and you wonder why that happened. Well, institutional capital is coming into the market. That's how it happened.
Right. I'm also wondering if the price, to get your take on that, do you think the price is also being impacted by the upcoming halving event as well?
Yeah, that happens April 22nd, but we've been through this before. Generally, if you go 150 days after halving, you're up, but you never know. I mean, obviously, what I tell people about Bitcoin is use it like gold. Use it as a digital gold. It's going to be volatile. Have an allocation. We use it as a 5% weighting in our portfolios. It's been one of the best performing in the last 18 months, but so is gold. Gold has done well too, and some other assets we have. It's just another asset. There's nothing magic about it. I mean, I don't have any phobia about Bitcoin, but I put it in its place in terms of diversification. It's never more than 5% of a portfolio.
So, Kevin, it's interesting what you said about institutional interest. Today, I woke up to the news to see that UK regulators have just approved Bitcoin ETNs, exchange traded notes, but only for institutions, not retail investors. What are your thoughts on that?
That's fine. I mean, that's really where most of the money is. They did the wise thing there because they don't want the volatility and risk in the individual investor right now. Institutions are clamoring for it because their clients want it. They want a 1% to 3%, sometimes 5% weighting in their funds, and they've allowed for it. This is a spot pricing product, not much different than what we have in the U.S. here in the ETF. But many institutions won't pay the fees of these things, and they'll just buy Bitcoin on their own, which they have done. And that's why the M2 exchange is so important. You need a place where you can rebalance on a daily or quarterly, weekly basis. And M2 is emerging as the leader there pretty quickly, taking over from what FTX was and what Binance was. Abu Dhabi is the new capital of capital around the world. So it's not a surprise to see it emerge there. And this is where institutions are going to go. So it's really, we're watching the maturation of this market by the introduction of sovereign wealth and institutional funds starting to buy cryptocurrencies and digital payment systems.
The purpose of VBetterDAO is to become a vast sustainability DApp platform and onboard millions of daily users in the coming years. This directly benefits VeChain tokens, VET and VThor, also known as the protocol value layer and the gas token. All activity on chain benefits VET. This is VeChain creating a new pathway to driving mass adoption alongside our enterprise initiatives, which yes, continues of course. What is better? Better is the incentive token. It's paid to people, apps, and the treasury. What is Vote? Vote is used for casting votes. For apps, community proposals, and treasury requests. It's obtained through a one-to-one swap with Better tokens. Join now and be better.
Let's talk a little bit about M2 because you've mentioned that quite a bit. So they are a crypto exchange based in Abu Dhabi. So what makes M2 different from other crypto exchanges like Coinbase, for instance, or Binance?
Well, Binance, obviously, as its founder awaits his sentencing in Seattle, is owned by a felon. And so that's going to cause problems by many institutions. They won't be able to use it. That's a non-starter for compliance. Coinbase is still in litigation with the SEC, so that's a bit of a problem too. Most institutions shy away from litigation with their regulator. It's never a good outcome. I think Coinbase has gone to bat against the SEC 3 times and lost every time. I don't know why they're not going to lose this time. I have no idea, though. But M2 doesn't have any litigation with any regulators. They've started a platform 100% compliant wherever. When they take on clients, they know your client. They provide a bank account. They're completely regulated by their regulator in the UAE and Abu Dhabi, and that's well known around the world. So it's really, the difference is getting these exchanges on board with their various regulators. And so it takes time. In the case of Coinbase, they're very close. No one's been criminally charged there, but they are offside. I think in the case of Binance, I think there's still a fraud charge to deal with the SEC. And so nobody wants to touch that stuff. Those days are so over. Nobody cares about that anymore. They've moved on. But the potential of cryptocurrencies and digital payment systems remains. It remains. And I believe that over the next 5 years, that will become the 12th sector, the S&P. Digitization of financial services will be a new sector. Cryptocurrencies will be a new sector. And they'll be embraced just like any other sector. Remember, the last new sector, the S&P, the 11th, was real estate. It took a long time to bring that in, but it's a major asset class. Now we're going to go to crypto.
Right. Now with M2 being in Abu Dhabi, so someone such as myself, if I wanted to use that exchange, I couldn't because I'm based in the United States. Is that correct?
Yes, you can't use it because it's not cleared here yet, but only 40% of Bitcoin is in the United States. The other 60% is held worldwide, and so they're dealing with that part of the market. You can be a shareholder of M2 by simply buying it on the ADX exchange, Interactive Brokers, or any other international brokers that you can. I'm a shareholder that way. I bought shares in a company called Phoenix that trades on the ADX, and I'm able to do that, and I just own it because I want to own that picks and shovels. Mm-hmm. But no, you cannot open an account on M2 if you're an American resident.
Okay, interesting. I also want to talk about WonderFi. So WonderFi is interesting. Now, is WonderFi an investment platform based in Canada?
WonderFi was an investment I made years ago. And the WonderFi management, their mandate, or what they told investors, was they were going to consolidate all the exchanges in Canada. And that's exactly what they've done. They're regulated by the OSC, so they're completely compliant. They have 1.6 million accounts. They're the largest exchange in Canada, completely compliant with their regulator. And I'm still a shareholder of it. And that's the kind of idea. I mean, I own M2 in the UAE, and I own WonderFi in Canada, and I'm going to continue to buy exchanges that are not in any way in litigation with their regulator, because I'm a regulated entity too, and so I can't afford to be offside in any way, anywhere. And so, I issue securities, or I have a company that's indexes for ETFs called O shares, and we obviously want to be compliant. We don't want to go offside with the staff of the OSC ever. So we stay away from that, and we disclose our ownership.
Right. Yeah, regulations, that's obviously interesting to talk about, especially in the United States. What are your thoughts on the regulations here in the U.S.?
Well, there's many regulators, but obviously the SEC and Gensler have been very cautious in their advancement on particularly Bitcoin. They remain so. However, they are advancing new products, as we saw with the Bitcoin ETF, and the rumor mill now is around the Ethereum ETF, which already exists in the Canadian market. So there's precedent for it. I think, given all the criticism that Gensler's taken, I still think he's doing his job in terms of keeping things compliant. That's the whole idea. And those that want to go deal with the staff and work it out are better off than not. The whole point is, and I keep telling people, none of this matters until this gets regulated, because there's the vision of the crypto cowboy time when nobody cared about the regulator and it was all going to be decentralized. That never happened. It never happened because the institutions don't want that. They're not interested in it. They have no interest at all in working in an unregulated cowboy environment where they're offside. And so by the integration in compliance, the reporting integration, the systems working within the funds that have to mark to market every day. I mean, I mark to market everything we have every day. We have to know what our positions are. We have to stay within our mandates. Some of these are self-imposed mandates for diversification. So we don't have any rogue or cowboy inspirations. We just want to be on board with the regulated environment and play by the rules. And that's about 99% of institutional investors. That's how they feel. So I'm encouraged to see, even though it's quite slow, and I'm watching the Stablecoin Act grind its way through Congress. I mean, there's a lot of people that realize there's lots of opportunity here for the benefit of our economy, and that we will advance these mandates forward. I spend a lot of time in Washington on the Hill these days.
Right. Yeah, I remember that. Shifting gears a little bit, let's talk about TikTok. Is that okay?
Sure.
What's happening? So the U.S. Congress is trying to ban TikTok in the United States. Is that correct?
No, they're not trying to ban it. What they're trying to do is say, look, the companies ignored our cries for national security to resolve the issues around leakage of data from the app, of Americans' data to the Chinese. And I mean, everybody's known this for quite a while. I mean, look, I have two phones. This is my TikTok phone. It has TikTok on it, but it has nothing else of relevance on it. It's completely stripped of any data about who I am or where I am or any of my personal information or any of my corporate information. And that's because everybody knows that TikTok leaks back to the Chinese. Here's my regular phone, no TikTok on that. And that's the only way you can use TikTok safely. Let me preface my comments saying that, I have no ill will to the Chinese people. I've always admired their culture and their advancement in science over thousands of years and what they brought forward to humanity. They're terrific people, and I respect them immensely. I don't trust their government, and apparently neither does Congress. And so they've tried to address this issue now for 2 years. It keeps coming up every 6 months. This time it's getting very serious because this bill, it should be signed into law, won't ban it. It will tell and every Chinese company, I don't care what they're called, DanceBite or whatever you want to call them, they're just the Chinese government. Everybody knows that. I mean, you're beholden to the Chinese government, and that's the way it works. This is a communist country. I'm not debating pro or con. I'm just saying that's how it works. So what this bill will force the company to do is divest of the asset in the United States if it wishes to remain operational. So I'm interested in buying the asset. I'll buy TikTok, and here's how I would do it. So we know if this bill passes, and we'll find out on Wednesday, it looks like it could be voted on as early as that, and it's bipartisan, so it has some probability of passing. The company will then be put on a clock to sell or shut down, which would be stupid. There's no need to shut it down, so they're going to sell it. They'll start a process. What I'm going to propose is the formation of a bipartisan oversight committee comprised of 2 members of the Republican Party, 2 members of the Democratic Party that would oversee the transition to a NewCo in America. And what I would go to them and say, look, here's what I'm going to guarantee. I'm going to guarantee that we will strip the code and remove all the back doors to the Chinese government, number one. I will guarantee that we will move all of the servers, if there are any, that are outside of the U.S. onto U.S. soil. So the company's data will be nexused domestically. I'll make it safe for parents. I'll make it safe for users. I'll make it safe for large businesses to advertise and small ones. I will change the board if necessary, put on a whole new team there, swap out the management if necessary. But I would request of the Oversight Committee to tell me what percentage I could leave in the hands of the Chinese as passive investors with no operational control. Maybe that's 10, 20, 30%. And the reason I would propose that, not knowing what their answer would be, is that we have many joint ventures, American companies in China, and we enjoy those relationships, even though we are adversaries sometimes. But they would become passive investors with absolutely no control at all in the operation of the company. Now, if the Oversight Committee told me I couldn't do that, well, I won't do that. But I'm not going to go forward because this is going to be a multi-billion-dollar syndication of debt and equity to buy it. It's one of the most successful advertising platforms ever created, one of the best algorithmic uses of technology to find content that people want, and it's obviously been successful with 170 million followers. And so that Oversight Committee will be valuable in getting the deal done, because if I have to raise $20 billion, no one's going to raise a dime of it to go beside me in the deal if we don't have the House on board. And so we're going to need to structure it that way. It's going to be a very complicated deal, but it's way better than shutting it down. And for the Chinese owners now, they're getting a fair market deal based on whatever that price is, given the covenants in place. So I would very much like to be part of that. I'm hoping to be able to lead that syndicate because I think my plan would work.
That's interesting. Now, let's say you were able to buy TikTok and do everything that you just said. Would you possibly have plans to implement like a crypto element into it where people could maybe go to the TikTok shop and buy things using cryptocurrency, or maybe creators could earn crypto for, their content?
100%, but it would be done on a compliant basis. I mean, I think using digital payment systems on a platform like TikTok and adding features like that is the potential it has. There's no question about it. And so TikTok's a global phenomenon. So if you wanted to do a digital transfer between, person in another country, and it was compliant and transparent, and obviously auditable, so you would know who sent it and who received it, yes, I would provide that. Of course I would. And I think that's the potential of a platform that large. There's very few platforms that large in the world. And I think the chance that I could do this is very high because the regulator's not going to let Google buy it, not going to let Meta buy it, maybe would let Microsoft buy it, but that's not clear. And maybe Microsoft doesn't want the headache of dealing with the Hill this way. I'm willing to take it on. I think I have good relationships on both sides of the aisles. I've been going there for years, and they know I'm an advocate and a strong supporter of small business. It's a very important platform for small business. There's no question about it. So I think I would be a good steward for this process. But the potential, and obviously bringing in a new management team, an American management team that would be beholden to the advisory committee, at least for the first year and a half, is what we would have to do. And I would work with national security advisors because we want to prove to them that this code is not leaking. I know my TikTok phone is leaking data to the Chinese, but there's no data to leak. So I got the joke a long time ago. And so many people do this strategy too. There's other apps on here too. Any app that's scraping my data or giving away my location, I put on this phone. This is the social media phone. So it's not just TikTok, but TikTok's the most egregious because it's not even a debate. Of course, the Chinese are pulling the data off it. I mean, why do we even have to debate that anymore? It's a well-known fact. So let's all get over it and move on. Maybe this is the solution.
Yeah, I know. I think it's the solution for sure. And I mean, now I'm worried because I started using TikTok recently for this podcast. And I'm like, oh no, I don't have two phones. So my data is probably
well, it's something you can take it off and move. I mean, there's a reason it's been banned in so many corporations and government agencies. It's obvious. So, you can do this yourself by just getting another phone, and the lowest plan you can get. They're quite inexpensive. And then completely conceal any data that you don't want on it, which is easy to do.
Definitely. Well, then another concern of mine, and this is a little bit off topic and more personal, I've used the TikTok shop. They've got really great things on this TikTok shop. And I put my credit card information in there. I wonder, that's probably not safe.
Well, my advice on any platform is to get a separate credit card, which I've done with my companies and my family. A $2,500 limit on it, just used for online services. That way you're protected. You watch all the transactions, even on TikTok. TikTok's a fantastic platform. All my companies use it, and so
yeah.
It's just a matter of you can put guardrails in place. I mean, I have multiple credit cards, but there's only the one I use online has a $2,500 limit, so there won't be a disaster anytime soon. And frankly, I don't trust anybody online. Like authentication, 2 levels and more. I mean, you should be wary. AI is making it easier to hack everything, and that's just the world we live in. But social media is here to stay. It's a very powerful tool. It's very important for advertising and customer acquisition. I've got over 1 million followers myself. I think 1.3 million or something on TikTok, and I'm proud to have them. And I communicate with them daily about the narrative, whatever the narrative of the day is, and I enjoy that interaction with them.
Yeah. Well, another benefit of you potentially buying TikTok would be extremely beneficial for the Web3 community as well, because you're passionate about crypto, you're passionate about Web3 technology. And I think that can help with mainstream adoption, probably even drive the price of Bitcoin up. If people on TikTok start using Bitcoin and earning Bitcoin for their content,
anything's possible, but it's finding the right stewardship for this highly contentious situation between the company and Congress. They've tried to make this thing go away, and every 6 months it percolates up to the surface again. And now they've got all these congressmen and senators just barking at them like dogs. And I don't know, they haven't seemed to have been able to put it to bed. So this is the next step. And I think I can be very helpful in making this thing work under its new management.
Definitely.
The problem with data today is that a lot of people profit or companies profit from it, and they take your data, but you're not properly incentivized or compensated for it. Blockchain and cryptocurrency make it possible that you are incentivized, and they make the data more useful by making it immutable.
XYO is the supply chain for data. It allows you to produce high quality, pure data to manufacture solutions and applications on top of it.
Okay, let's shift gears a little bit. Let's focus on Web3 again. In terms of interesting Web3 projects today, do you have any that come to mind that you'd like to talk about, or just anything with Web3 in general that you find really interesting?
Yeah, I have multiple projects ongoing right now and multiple investments. Some of them involve the art world. Some of them are involved in watch insurance, for example. I'm a big watch collector. I wear 2 watches every day, Abu Dhabi time, New York time, because I do so much work in both places. We have a whole bunch of tools, Web3 tools, for small business to help them, customer management, web development, social media management. All of these things are projects that I'm invested in, and we support our companies using these tools. AI has been very active for us in changing languages on our advertising. We advertise now in 42 languages. We just brought out a Chinese version and a Spanish, as well as an Arabic, of some of the ads and services we use. So there's so much going on Web3. It's all considered Web3 because it's extremely advanced and very productive and very low cost, I might add. So, multiple fronts, any tool that can enhance the productivity of a business, that's what I'm focused on.
Right. Do you ever get confused wearing 2 watches with like New York and Abu Dhabi time? That's a side.
No, that's why I have 2 watches, because I've been waking up my team in Abu Dhabi at 2 and 3 in the morning. So now it was their idea. Why don't you wear another watch, boss, and check us out before you call us in the middle of the night, which I do anyways. But I just enjoy, I'm a member of the New York Horological Society. I support young watchmakers. I'm a patron. I have a massive watch collection. I buy a lot of unique pieces. I like to wear them. I've always felt a watch loses its soul if it just sits in a safe. And so I travel with 17 to 20 pieces. I wear 2 a day. I switch out. There's a breakfast set, a lunch set, and a dinner set. So 6 watches a day. That's just who I am.
Yeah. I want to do that except with handbags. So maybe one day in my life I could do that. Travel with 17 different designer handbags and switch them out throughout. But anyways, let's talk a little bit about AI. What are your thoughts on AI? Are you worried about, AI generating these deep fakes and ruining elections or anything like that? Or just your thoughts in general about AI?
No. I remember, go back and read history about the advance of the first radio signal. It was feared. Television was feared. The internet was feared. Every new technology starts with just hate and loathing. And then over time, everybody realizes it's just another tool. And this could be a very good tool for enhancing productivity across all 11 sectors of the economy. And certainly the market is betting that way. But it's not really anything more than a tool. It'll get integrated into other apps. It's not really a standalone product. And so for all the hype, it'll take time to actually realize its potential. And there'll be a lot of missed starts. Google's learning that. I just see the tool for what it is today, in a nascent form. There's lots of problems with it. We use it. It hasn't, we've, as I talked about translation, it's very useful. We use it to query a lot of data about our commercials and what we do on social media, asked to make suggestions to enhance scripts, for example, and all kinds of things. But it's nothing more than a tool. And so we don't fear it. We embrace it. And we realize it's probably in the first inning of what its potential could be, but it's going to take years.
Definitely. And with all the challenges and regulations and those issues around AI, yeah, it will take a long time. Freedom GPT is an app store for AI. Freedom GPT is most commonly known for its censor-free AI model called Liberty that answers literally any prompt you ask with an unbiased response. Unlike other AIs where controversial topics are off limits, Freedom GPT embraces the concept that you should be able to ask AI anything. Equally important, Freedom GPT has the option to be run locally on your computer so your data remains 100% private and secure. Check out Freedom GPT's over 80 AI models today. So, Kevin, I know we're running low on time. Do you have any additional comments that you want our listeners to know about? Any interesting takes on crypto or Bitcoin, anything like that?
Well, I would say one thing that Web3 and crypto and digital payment and everything is forcing is a new asset in real estate called the 5.9 data center. So let me explain what that is. In order to advance AI, we only have built 8% of the data centers we're going to need worldwide. Now, these are expensive. They're 100 megawatt data centers. The shell that houses the computer stacks costs $1.2 billion. Takes up about 50 acres of land, requires power under 4 cents a kilowatt hour, and requires redundant fiber on all 4 corners of the building. And so these are very specific. So hydropower is good, wind is good, solar is good, but low cost electricity is the key. There's only so many states that have all these attributes, and you need stable policy. People are withdrawing their project proposal for New York. In upstate New York, I have Niagara Falls, which has low-cost hydropower, but nobody's willing to take a chance on New York right now, given what's been going on with this policy of seizing real estate assets. We're all going to wait to see how that plays out. Really nothing to do with Trump. It's more about the policy there. If that's what New York decides to do, well, they'll probably not get a lot of investment in real estate, and that's sort of what's happening. So we had a project in upstate New York. We've moved it. That one went to Norway. But we also have new projects in Oklahoma, North Dakota, and West Virginia. And we're exploring Montana. These are safer places to put that much money in the ground. Now, when I said 5.9s, that means the site has to be up. To get a lead tenant like Google or Microsoft or the DoD or the IRS or a bank, you need to be up 99.999% of a month, which only leaves 14 seconds to be down. So we need to have backup generators, and the actual stacks, I told you 1.2 billion for the shell. The stacks themselves cost 2.6 billion for 100 megawatt. That's 26 million per megawatt, and we have to refurbish those every 4 years. So obviously we can't pay state tax on that every 4 years, that there'd be no economics left for the investor. But these are really interesting new projects. They create 400 very high-paying jobs while they're being built over 2 years, and then 120 jobs in perpetuity. And for every one of those jobs, 5 more support jobs and dry cleaners, laundries, restaurants, daycare centers, Uber drivers, all that stuff. So most communities want one of these, but really it's the competition of states to provide the right policy, fiber connectivity, low-cost electricity, and that's one of the projects that I am working on.
Cool. What are you looking at Texas at all? Because, there's a lot of the mining facilities are in Texas, and then ERCOT, Texas has its own grid. I'm just wondering, and there's a lot of land, would Texas fall into the category?
Yes, it would. And that is another potential. But the active projects under negotiation in my world with my team are in those states I mentioned, Oklahoma, North Dakota, West Virginia, and early stages in Montana. And we haven't got to Texas yet. There's a lot of competition there, and I think it's great. But some of the attributes of these other states that have been ignored for so long are even more attractive than Texas. So this is all about, the relative competition and we have to work with state government, the senators and the governors to get these are very, very, very large projects and very large amounts of capital. So you need stability.
Definitely. Cool. So Kevin, if our listeners want to get in touch with you, or if they want to follow you on social media, how can they do that?
I'm Kevin O'Leary TV on every platform.
Wonderful. Any final thoughts before we end the interview?
Well, I'm very excited about 2024. Obviously, we're going to have some volatility with the election, but I think the economy is quite strong, and I see that in my portfolio. And I tell every entrepreneur that's listening, don't wait to start a business. Do it now. There's never a time like now. Otherwise, you'll never convince yourself to take the risk. Just give it a shot. There's no life like it.
Definitely. Yeah, those words are very inspiring. So Kevin, thank you again. Thank you for all that you do. And I'm excited to stay in touch and follow you on social media.
Take care. Thank you.
Thank you. Bye. Special thanks to 4Labs Digital for producing Web3 Deep Dive podcast. I'd also like to thank the sponsors behind Web3 Deep Dive. You can click the links in the show notes to learn more about each of the Web3 initiatives from these sponsors. Finally, thanks to the listeners for tuning in. Please be sure to subscribe, like, and share. I'll see you guys next time.